Welcome to Aspire to Retire. I'm your host, Cheryl Nelson. I'm here with Ralph and Tim Short, along with Scott Earhart, all from Welcome Home Financial Partners. Good to be with you guys again here today.
Good to be here. Thank you.
All right, today we are talking about how to better understand the stock market. I wish we had a class about this in school. I did not. And I hate to say, I feel like I still don't really have a good hold on the stock market and understand it. So let's break this down, guys. Let's talk about this and market volatility and how to go about trying to, as people say, conquer the market.
Well, what I would say is if you're thinking about conquering the market, I think you're in the wrong school of thought.
Uh-oh.
It's how do you use the market to accomplish your goals?
Okay.
Okay, because nobody understands what's going to happen with the market because it's so emotional. So somebody comes out with a new law today. The stock market may increase by 50%. The next day, it may go down 50%. So you just don't know, but you cannot conquer the market because it's so up and down, so sporadic. What you need to understand is what are your goals? How do you use that to make sure you accomplish your goals, because when you're in 20 and 30s, you just start throwing money in it because you don't need it at the moment. But when you get closer to retirement, you've got to utilize that pot of gold that you've established to bring income to you for your paycheck, because now you don't have a paycheck coming in. You've got to do that. But you cannot conquer the market. Nobody can.
Yeah, and I think a big thing is everybody gets greedy, right?
Yes.
So everybody's trying to outperform the market, conquer the market, however you want to label it, and it comes back and it bites them in the butt, right? So what we focus in on is how do we use the market to accomplish our retirement dreams? And that's what we sit down with folks and we talk about, because you don't just leave your money in the stock market for your entire life. Now, that doesn't mean you always fully vacate the market either. So that's why we sit down to folks and we talk to them about, hey, what's your risk tolerance? And it's going to be based off different factors, time horizon, all this other stuff. But the focus should be, once you get close to retirement and retirement, should be protecting your assets, still making them grow, but income is the foundation to your retirement. And that's not the stock market.
And one thing that we have to help educate our clients on, and we work with them constantly to do this, is change the mindset a little bit. I've said this before, there's a big difference between Wall Street and Main Street. We live on Main Street. We are real people doing real things with real bills and live in the real world, not what happens up in New York or wherever else the markets may be. So what I talk to my people I work with about is, let's not worry about conquering the market. Let's worry about conquering your retirement.
But how do you change that mindset, though?
Ralph, I'll let you.
Well, what I would say, it's not easy, because most people for 30 to 40 years when they're working, all they've been doing is throwing money in the market, trying to accomplish that big number over top of their head that you see on TV. There is no such magic number for everybody, because everybody, I'll give you an example. There's two types of clients that we have. One says, I don't want to spend any money. I don't know if I can retire or not. Then you got others over here, I want to spend every cent I've got. So the person that is over here doesn't want to spend anything, they don't understand how much money they do have. They've done the right thing by keeping their expenses low. They paid off debt, they don't have a lot of debt. So their $300,000 or $400,000 is going to last them a lifetime because they don't have that much expenses. But then you've got another client over here who's got $2 million. He came in, he's got $20,000 a month in expenses. Just do the math. $20,000 a month is not going to last very long with just $2 million. So it's just, you've got to understand your numbers. You got to understand what you're trying to accomplish, because if you don't do that, all the numbers in the world is not going to help you.
Right, and talking about how hard it can be sometimes is it's change, and a lot of people get scared by change, right? It's always an uncomfortable feeling.
Nobody likes change.
Right, especially here in the Richmond area, a lot of people have worked for the same company for 30 or 40 years, so if all they've done is taken their money and funneled that into their 401k, right? So if they've had it with this company, that 401k, they feel like that company has done them so well, when in reality, all they've done is held the money. And they don't really know what's happened. All they know is they've been putting money in there, their company might have made some contributions to the account, and then when it comes to, hey, what are we gonna do with this money? They're like, well, I'm gonna leave it there, they made me the money. And it's like, no, that's your money. What do we need to do with it?
Yeah.
Part of what we really have to do with everybody that we're working with that's entering retirement is help them change that mindset from I'm working for my money to now my money needs to work for me. And that's what happens when you enter into retirement. You're not getting a paycheck anymore. Now you have to pay yourself.
The other thing I would say is, in 2008 when everything went downhill fast, I will tell people that you understand that it took you probably about 10 to 12 years on an average to get back to where you were. And we'll have some clients say, oh no, it only took me 5 or 6 years, I'm that good. And I looked at them and say, well listen, let me ask you this question. Were you not contributing to your 401k? Was your employer contributing to your 401k? Yeah, you probably got back up in 5 or 6 years, but you forgot you were adding money to it. It's not because the market got you there,
right?
But it's a combination of it.
That's true. Yeah, you always have to put money in. You have to contribute to those accounts as well. Now, when the market is down, though, there are strategies where you can still make some money, like you just said, by contributing. But I feel like I'm surprised by this, and other people might be surprised that there are strategies as well.
Well, there are strategies, but the main strategy is why not protect your money and make it grow so where you can avoid some, if not all, the market loss. And if the market goes up, we can capitalize on some of the return. That's the big thing once you get closer to retirement is not focus in on let's try to conquer or outperform the market. Let's not get greedy. Let's not try to time the market and say, hey, I'm just going to leave my money in the market just a little bit longer and get a little bit more before I pull the trigger.
Yeah.
We've got to make sure that we've got this money here so you can walk out of the door and you can retire the way that you want to.
Why are so many people trying to outperform? So many people call themselves self-proclaimed experts in the stock market, and they say, oh, you need to invest all your money in X company. All of it now, because you're going to get so rich and you're going to be retired by this age.
Well, I think a lot of it is, in 2020 when COVID really hit, right? A lot of people started doing day trading. Everybody was sitting at home and they thought, hey, I can take X amount of dollars, I could buy this particular stock. Oh, look, I made a lot of money, right? But that's the way that the market went that year. That's not every year. That's not always going to happen. But guess what? A lot of people lost a lot of that money back in 2022. So there are so many things that come into play. The market's going to be different every year. You just can't time it. We always talk about, Scott, I know you're passionate about it, is the patient money and the impatient money. The money that is going to be patient money needs to sit in the market because if the market goes down, you're patient with it. You're not going to be emotional. You're not going to sell when it's low.
Oh my gosh, I feel like all my money is impatient money, but I'm sure a lot of people can relate to me there, and that's why these lovely professionals come in hand. Speaking of which, Tim, you have a special offer.
We do. So first 10 callers who dial 1-833-897-4845. If you've saved $250,000 or more for retirement, we'd like to personally invite you into the office where we'll create their very own retirement plan. And Cheryl, the best part is we'll do it on a complimentary basis.
All right, I love that. Now we do need to take a brief break, but we're going to open up those phone lines as Tim said. So if you would like some personal advice about retirement planning and more, call. That number again is 1-833-897-4845, or see that QR code on the bottom of the screen. Get your cell phone and scan that. You can use that to schedule an appointment as well if you don't want to pick up the phone. Coming up next, we will discuss the impact of financial losses. Ooh, stay with us.
Imagine the future you've been wanting all along. A world where your retirement income is covered and you don't have to worry. Your financial assets are protected, and you have an experienced team fighting every day to grow your assets. Imagine a company creating tax strategies and legacy plans to make sure your loved ones are protected no matter what happens. At Welcome Home Financial Partners, we're an experienced financial team with the right professional licenses and an unbreakable commitment to making our clients feel like family. Here you'll find determined, friendly faces in a world filled with obstacles and problems. We help plan your retirement income to ensure you won't run out of money in retirement. We build in protection to make sure your assets are covered on all sides. We focus on growing your wealth to combat inflation and rising cost of living. And we design tax strategies to help you avoid paying back what you shouldn't while protecting the people you love. Our team never stops fighting for you. With an unparalleled work ethic, we work hard because we know your future depends on it. We're proud to help you choose the life you want to live in retirement. Welcome to your financial future. We're so glad you're here.
Welcome back to Aspire to Retire. And I know sometimes picking up the phone and calling can be a little bit scary because that means you're opening a can of worms and now you have to talk about your money and your retirement. But there are perks to being one of those first 10 callers, right, Tim?
Absolutely. So first 10 callers, they'll receive a package in the mail from us in lieu of their appointment. So it will have a little bit of information about us to get them comfortable. Once they come into the office, they'll sit down with one of us. We'll get to know them, they'll get to know us, and we'll kind of start off the roadmap process. So that will be what they can expect.
When you say the roadmap, what does that mean?
So the roadmap, it's all tailored to each individual, right? So this is going to be based off each individual. So for their retirement plan, that's what the retirement roadmap is. It's going to be based off their assets, their income, tax strategies. There are going to be a lot of things incorporated.
So it is like a roadmap, everything right there on paper. I like how that works. And so guys, with so many Americans entering retirement, getting close, or already in retirement, what are some of the pitfalls that you're seeing?
I think the biggest pitfall that I'm seeing right now and consistently seeing is lack of diversification for people. We spend so many years working for the same company, contributing to our 401k, 403b, whatever retirement plan you may have, and then you just let it sit there, or you keep all the money together in one pot. And that's just can be really trepidatious to navigate that, because if everything's correlated there, and we have a downshift.
So wait, I've got a question about that though.
Okay.
So when you leave a job, you know how they say you can roll this over into your new 401k. Is it best to do that, or do you leave it there?
Depends on the individual. Well, it's always best to roll it away from a previous employer,
Is it?
in my opinion.
Okay.
That's my opinion, but you have more control of it. If you have a former employer and you just leave it there, you don't know what they're doing. You're not getting their communication. You're only getting communicated with by the custodian of the money, not the company themselves. So I would tell anybody, roll it into a place where you have control of it, whether it's your new company or into an IRA that someone like us would help you
I see.
establish.
And the other thing I would say is you left the company from your employer. Now all of a sudden, like Scott said, you don't have a lot of communication with them. What if they decide to change their investment strategies to a different company and you don't like that company?
Right.
You really don't have a choice because they're in control of who they want to invest that money.
Right, and then
Not
you forget where your money is.
Right.
So who has my money? If it's been sold here, sold there, you don't even know anymore.
And you don't have much control over it. So inside of a employer-sponsored plan, 401k, 403b, 457, whatever it is, you're only going to have a limited amount of investment options, right? If you leave it there, why have a limited amount of options that you probably don't know anything about? If you roll it to an IRA, then the options are going to be endless. So why not do that?
It all comes down to control. And I think that's what we all want, is control of our lives,
Yes.
control of our own money. So let's work with someone to help you get the control you want and deserve.
Not only control, but have a better understanding of what you have. Because 9 times out of 10, most people have no idea what they've got. They bring a statement in like we have talked about in the past,
Right.
but they have no idea what they've got.
Out of sight, out of mind is what they think of until they get close to retirement. And then they're going, oh, what have I been doing for the past 20, 30 years?
Right, and then with understanding comes peace of mind. That's
Yep.
what people
Yes.
want when they enter retirement.
As Ralph always says, a statement isn't a plan. So you can create a plan. Just got to bring us your statements.
That's so true. And the stock market, we talk about market volatility. It's like a roller coaster, goes up and down. But I think back to 2008 with the recession and people losing so much of their money. How do you recover from that? What if you're 67 years old when that happens? You don't have a lot of time to recover. What are you supposed to do?
That is a very tedious situation that you're in at that point in
Oh.
time, because if you're 20 and 30 years old, you don't worry about it, you just keep throwing money in. But as you get closer to retirement or in retirement, you got to be very careful, because all of a sudden, if you lost that kind of money, you may not be able to recoup.
Well, then what?
You change your lifestyle, or you go back to work, or you don't stop working.
Yep.
And that's what you don't want to do. And that's why we always sit down with folks and we talk about risk. There's different types of risk. It's not just about the stock market. So you know, if you're 67 years old and you lose 50% of your money, what are you going to do? And
Cry.
nobody wants to change their lifestyle. Well,
No.
once you're finally done crying, if that
Yes.
ever ends,
Yes.
then what's going to happen? You don't want to change your lifestyle.
No.
You don't work for 40 or 50 years just to sit on your sofa and watch TV because that's all you can afford to do. But streaming services these days, you might not even be able to afford to do that anymore.
Or you
So-
can't even watch your favorite show because you need 10 different streaming services.
Exactly. So those are things that you got to take a look at,
Right.
and that's why once again, we sit down and we focus in on that. You know, there's so many different things to look at, whether it's income strategies, tax strategies, all these things are going to come into play with a well-built retirement plan.
And the other thing I would say is it's not one answer to that question because it's individual based on what they've got, what they're doing. They may have lost 50% in their 401k, but they may have more money over here sitting in 2 or 3 bank accounts and CDs. So you don't really have to worry so much about, but it all depends on what that individual's doing and what they're trying to accomplish.
Yeah. Now, what about preventing losses? Because you always see about this 2040 retirement plan, this 2050 retirement plan, 2060, and they have different levels of risk. But is that the way to do it? Are you supposed to do it like that, or?
Well, that's not going to prevent any loss.
No,
those are
that's
just
the
target
thing.
dated funds, and that's what a
Right.
lot of people use now.
Yeah.
But you know, if the market goes down, you're still going to kind of follow the trend. So,
Okay.
but that's, you know, I've sit down with people before, and I'm like, well, why did you choose this fund? Well, I don't know. I know if I had selected the 2040 fund, I know they've told me HR is like, oh, if you're retiring in 2040,
Yeah.
go ahead and select that. Well, that's kind of the cheap way of investing your money because there's no real thought to it, and they rebalance it based off the year. And
Yes.
that's not generally the way to go. It's not going to give you specific advice based off your wants and your needs.
And it's not individualized.
Correct.
It's
Yeah.
just where it is.
Yeah. So individualize, you want to plan for that. You also want to assess your risk, as you mentioned. So when you're getting close to retirement, are you supposed to be taking very little risk at that point?
Well, it's going to be based off everybody's situation. There are some people who can take more risks than others. But
Right.
once again, when we talk about risk, it's not just the stock market. There's a lot of people now specifically that want to take all their money and dump it into CDs. Well, if you take all your money and you dump it into CDs, and then you need some money because your car broke down or you need a new roof on your house, then what? If you didn't do it properly, then you just vacated all the interest that you were going to get. So then your money sat somewhere and you didn't make a dime and your money's not working for you.
Because CDs, do they have penalties if you touch it before a certain amount of time?
Yeah, and each vehicle is going to work a little bit different. But the biggest thing is we kind of set things up to where they're in different pots, different buckets, whatever you want to call it, to where, hey, if this happens, because once again, the unexpected is expected, we just don't know what. If X happens, I need X amount of dollars, hey, I can go to this. That's not going to mess up my other buckets. But if the market drops, hey, I don't have to worry about those buckets because this bucket's affected. There's so many different things to take a look at, but you never take everything and stick it into one basket, because then if life throws you that curveball and that bucket's affected, then hey, then what?
There's too many curveballs, and I'm going to throw a curveball right now. We have a special offer. Why don't you tell our viewers about it?
That we do, Cheryl. So for the first 10 callers who have saved $250,000 or more for retirement, call the number you see on your screen, 833-897-4845. We'd like to personally invite you into the office where we'll create the very own retirement plan just for you. And Cheryl, the best part is we'll do it on a complimentary basis.
That's great, and the best part also is you get to meet these lovely folks. So I think that's something else that's really nice too. They're like family, they really are. It's time for a commercial break, guys, but keep those questions coming. Take advantage of our lovely professionals and call for advice now. Again, that number is 833-897-4845. If you don't want to call on the phone, there's a QR code on the bottom of the screen. Get your cell phone, put it up, and scan that. You can schedule your own appointment right there. Coming up next, we will feature some of your burning questions. Stay with us.
It was the longest-running bull market in history. Everything was looking up. While inverted yield curves pointed to a recession, the market kept going. And then, if you're planning to retire soon, that could spell bad news for your returns. Our team can help you better withstand the bear market. Now more than ever, you need a financial professional to stand with you. Visit our website to learn more about our services. You can call or email our office to schedule your complimentary consultation today.
Welcome back to Aspire to Retire. It is our favorite part of the show. Time to feature some of your burning questions. So first, before we get to that, guys, why should someone sitting at home today pick up the phone and call or scan that QR code with their cell phone?
I would say number one is give you some peace of mind. Have a second opinion. Know where you are. Understand what it is that you're trying to accomplish, and are you going to accomplish the goals that you set forth for your retirement? Because if you don't do that, you don't really understand what needs to be done, how you can tweak your plan that you got, if you've got one.
Right, that's true, and it doesn't cost anything to call you guys or to go ahead and try to schedule that appointment, right?
That is correct.
Yeah, so you might as well. You've got nothing to lose, and I'm sure you have questions. So speaking of questions, let's get right to them. George in New Kent says, with so much up and down in the market recently, how would I know when the right time is to move that money to safety?
George, that's a great question. And to give you an exact answer, I don't think we know enough about you yet, George. But when we sit down and meet with you, we're going to ask you some questions, find out where you are in your life cycle, your retirement cycle, what your goals are. And then we're going to show you some options for safety. We're also probably going to show you some options to continue to get you some growth as well. There is no universal answer, George, unfortunately. What it is it's time to take action and get control of your situation, understand what you need to do, get some advice. That's what I tell you.
But I understand when I watch the TV programs that they show up on TV advertisements and stuff that we got this magnificent plan, put all your money with us in the market, and you don't have to worry about a thing.
Oh.
How do you know?
Well, they don't know.
Right.
That whoever's advertising that plan, they simply don't know.
Right.
And anybody that does what we do, that tells you put all of your money into one place,
No.
that's just really bad advice.
That's all your eggs in one basket.
Exactly.
We're fans of multiple baskets and buckets here.
Yes.
Right. But the key is it's got to be tailored to you. And that's
For
why
sure.
it's hard to answer some of these questions just because we don't know
Yep.
the whole picture.
Absolutely. Okay, next is Carol in Powhatan. Carol says, I want to grow my money, but I'm so scared of taking a big loss. What is your advice on how to earn but not to lose? This is how I feel because I get so defeated when I see that money go down. And I just want to pull it all out and say, you know what, forget it. I'm going to keep it in a savings account instead.
Well, what I would say is, somebody in your situation would be completely different than maybe what Carol is, because I'm not sure what her age is, what her age and stage
Right.
and her life cycle is, because, there's kind of 3 stages in retirement. One of them is what we call you can do anything stage. You got about 5 to 7 years once you retire. You can do anything you want to do. You've got the money to do it, because guess what? When you retire, you should be in the best financial shape that you should ever be in, because at that point in time, you get to do those things that you've dreamed of.
Right.
The next 10 years probably you could do the things that you want to do, but you really don't want to. And then the last stage is you might want to do that, but you're not able to. Medical issues, health issues, things like that. So we need to understand where they are in those situations. There are ways that you can grow your money without taking a loss, but to answer that question, don't know enough about what she is trying to do.
Yeah, all right.
Would you agree?
I agree. We'd need to know more information. But Carol, one thing I'd tell Carol is just have some peace of mind that there are solutions out there, and we can help you find those solutions.
Okay, good answers. All right. Dennis in Ashland says, I took a loss in 2022 and I've seen a rebound this year. When my accounts were going down, my broker told me it was a great time to buy more. And now that my accounts are getting close to where they were, my broker is telling me it's a great time to buy more again. I'm so confused and I don't know what to do.
Well, the biggest key to that is when do you want to retire, right? So if we're going to continue to buy into the stock market, the market's always going to work in some sort of cycle. The cycle we've been in recently isn't really based off historical trends.
Really?
But what
Okay.
we're taking a look at now, if you're getting close to retirement, we need to probably throttle back on some of this risk. You don't need to worry about the accumulation phase anymore. We need to now focus in on how can we safely protect your money and still make your money grow, right? Everybody comes in and they always want to talk about, hey, I don't want to lose any money,
Yes.
but I want to make all the money in the world.
Of course.
You can't do that. There's always some sort of give and take. You can still make decent amount of money and still have your money protected. And that's what we kind of focus in on people that are getting close to retirement or in retirement. But the advisor that you're speaking about or the broker that you're talking about is just focusing in on making your money grow. If you're 30, maybe not a bad strategy, but I don't know how old you are. If you're 60, 70 years old, I don't know if I would continue taking your hard-earned money and funnel it into the market, because guess what? By the end of the year, we could see it go down. We just don't know.
But the other thing I would say is your advisor, is your broker a fiduciary? Because that means a little bit more to trying to plan out your retirement strategies and whether you should do this or not.
Define fiduciary really quick.
Basically, we have your best interest at heart
Okay.
instead of what product we're going to sell to you.
Oh.
So that's the other thing, because it's all goal oriented. It's what is best for you. And that's the biggest thing that people need to understand. And with that question is, yeah, not only the risk factors, but what about tax preparing,
Yeah.
things of that nature, because all of a sudden, the way you would do certain things is going to be different based on that strategy.
And to piggyback a little bit on what Tim was hitting on, it might have been a good time to buy more. Today could be a good time. It could be, but at some point we have to start thinking about distribution rather than accumulation. And that's going to happen to all of us at some point in our life. We need to start taking money out and not putting money back in. For Dennis, it's just where he at, as Tim was getting
Right.
at. And it sounds like the person he's working with isn't necessarily looking at the whole picture.
Yeah. Okay, one more question. Debbie in Rockville says, I've been retired for about 10 years. I have my money in the markets. I have concerns that a recession could force me to return to work. How to ensure that I don't have to go back to work again?
Well, what I would say is take some of that risk off the table in the market, because if you're that close, you're in that retirement red zone. So you really need to kind of throttle back on what you're trying to do.
Yeah, and that's what our process of the roadmap is really built for. Hey, can I retire the way that I want to? And if so, if we've already got enough money saved, then that's when we really start taking a look at, let's take some of this risk off the table.
All right, that's where you guys come in. You have that special offer one more time.
Yes, sir, we do. So the first 10 callers who have saved $250,000 or more for retirement, call the number you see on the screen, 833-897-4845. I'd like to personally invite you into the office, and we'll create the very own retirement roadmap just for you. So the best part is we'll do it on a complimentary basis.
That sounds good to me. Okay, this wraps up today's show. We want to thank you all for joining us once again today on Aspire to Retire. Next time, we will discuss the emotions surrounding retirement and how to change your mindset to empower yourself for the future. If you'd like some advice, once again, you can call right now at 833-897-4845 or scan that QR code on the bottom of the screen, and you could be featured on our next episode. On behalf of all of us at Aspire to Retire, I'm your host, Cheryl Nelson. Have a great day.